Welcome, and thank you so much for coming to watch this video. Everyone obsesses over AI chips, but how do you actually feed petabytes of data into those expensive GPUs without crashing the system? Well, that is NetApp's $6.9 billion secret.
Yeah, it really is. I mean, just summarizing their prepared presentation, NetApp reported record fiscal year 2026 results. We are talking 6.93 billion in revenue.
Wow, that's massive.
It is. And they had an EPS of $8.13. AI is just this massive catalyst for them right now, driving 1,100 wins in FY26.
1,100 wins, that's insane.
Right, and for FY 2027, they're guiding an 8% revenue growth to roughly 7.45 billion. This is heavily backed by their zero-copy data activation, meaning companies can use data for AI without actually moving it.
Okay, so if GPUs are race cars, NetApp is basically building the high-pressure fuel injection system.
That's a perfect analogy. The big question, though, is whether this growth is sustainable or, just a temporary AI panic buy.
Exactly. And before we jump into the rapid-fire Q&A to uncover NetApp's pricing power secrets and answer that, please hit like and subscribe so you don't miss our ongoing series on AI infrastructure.
So let's break down the analyst Q&A. David Vogt from UBS asked about demand pull forward and margin cadence.
Right, and what did they say to that?
They said there is minimal pull forward demand and product margins will trough in July and improve after. Then Amit Daryanani from Evercore ISI asked about all flash drivers.
Well, high-performance flash is essential to feed those expensive GPUs, right?
Yeah, that was their exact point. Next up, Eric Woodring from Morgan Stanley wanted an AI win breakdown. Out of those 500 Q4 wins, they were entirely on-premise, mostly for data prep and training.
Wait, entirely on-premise? That's interesting.
It really is. Then Wamsi Mohan from Bank of America asked about their large deal pipeline. NetApp is actually winning entirely new accounts based on AI priorities.
That's huge. What about the cloud, though? Did Tim Long from Barclays bring up cloud sustainability?
He did, yeah. Cloud storage actually grew 30%, and their Keystone as a service is just booming.
Oh, nice. Good to see the cloud side is strong, too.
Definitely. Samik Chatterjee at JP Morgan asked about seasonality and that new Google deal. They expect normal seasonality, and the Google partnership vastly expands their sovereign cloud reach.
Okay, but what about hardware costs? Stephen Fox from Fox Advisors must have asked about NAND price impact.
He did, because memory is getting more expensive, but NetApp is just raising prices to offset that component inflation.
Oh, wow. So they just pass the cost along? Serious pricing power?
Exactly. Aaron Rakers from Wells Fargo asked for early feedback on AID, their AI data engine. They're seeing really strong NeoCloud adoption, which creates a very sticky moat for their installed base.
A sticky moat is always good. Did Azia Merchant from Citigroup ask about their M&A strategy?
Yep, they're constantly evaluating targets and ruling absolutely nothing out. Krish Sankar from TD Cowen pushed for more NeoCloud details.
Did they give any specifics?
They confirmed a top 5 U.S. NeoCloud win, though they wouldn't break out the exact AI revenue.
Got it. What about Param Singh from Oppenheimer? Did he ask about aid monetization?
He did. It's priced by data volume, which is driving a ton of new data lake wins.
Makes sense. And Catherine Murphy from Goldman Sachs, she asked about the AI go-to-market strategy, I assume.
Yes, and they've built a dedicated specialist AI sales team for that. Then Simon Leopold at Raymond James asked if sequential growth implies less seasonality.
And does it?
Not really. They said it's normal seasonality when you adjust for an extra week they had in Q1. Ananda Barua at Loop Capital then asked about cloud margin mechanics.
Let me guess, mix shift.
You got it. A mix shift toward high-margin storage is what drives their profitability.
Makes total sense. Any last questions from the analysts?
Just one from Nihal Chokshi at Northland Capital Markets. He asked about AI revenue per deal.
Did they give a hard number?
No, they basically said there's a wide range of deal sizes, so no specific AI revenue breakdown. To wrap it all up, though, NetApp is successfully transitioning from traditional storage to the foundational data infrastructure for the AI era. They are utilizing immense pricing power to just outrun component inflation.
A really fascinating shift. Final thought for you. If data is the new oil, is NetApp becoming the world's most indispensable pipeline? Thank you so much for watching. If you liked this video, please click like, share the video, subscribe, and stay tuned for upcoming content.